On July 4, 2025, President Donald Trump announced he had signed letters to 12 countries laying out new tariffs on their exports to the U.S., with instructions to take it or leave it. In other words, these are non-negotiable offers. Accept our terms or face steep taxes on your goods. The letters themselves won't be revealed until Monday, but Trump signaled that some tariffs could climb as high as 70% if no deal is reached, taking effect around August 1st. Trump even quipped that the letters are better, much easier to send a letter than haggling in person. In short, trade talks have stalled, and now the White House is resorting to full-blown pressure tactics. Cartoonists rendering of Trump behind a huge tariff wall around the U.S., lampooning his protectionist stance. This hardline move comes after months of fits and starts. Earlier in April, Trump imposed a base 10% tariff on most imports and threatened much higher reciprocal tariffs on dozens of countries. He then paused those higher rates for 90 days, ending July 9th, to try to hammer out deals. So far, only Britain and Vietnam have reached agreements they keep a 10% rate or cut it to 20%. Key partners like India, the EU, Japan, and others have failed to finalize deals. With the deadline looming and Congress pushing Trump's big America First trade agenda, the president is now wrapping those tariff demands in plain language. Here's our final offer, and sending them as letters to select governments. Who might receive the letters? No list was given, so there's wild speculation about which 12 countries are in Trump's crosshairs. Likely suspects include major U.S. trading partners who have seen talks stall. China. Still locked in a bitter trade war with the U.S., China would be an obvious target. Trump's earlier tariffs on Chinese goods reached up to 45%. New letters could reimpose or increase those tariffs. China's response. Beijing has already vowed to hold firm against U.S. pressure and sees America as overestimating its own leverage. Expect stern rebuttals or matching tariff from Beijing. European Union countries. The EU, as a bloc, has been negotiating with the Trump administration for months. Brussels has repeatedly protested the U.S. tariffs as unjustified and illegal. If the EU is counted as one partner, or if key EU members, like Germany, France, Italy, are singled out, they could face letters. Rumors suggest the EU may resist any deal that just accepts a 10% U.S. tariff on European exports. So letters to EU members might set high tariffs on autos, dairy. Japan? Talks with Japan have been rocky. The U.S. has already slapped a 25% tariff on some Japanese cars. If no agreement materializes by July 9th, Trump hinted he could push Japan's tariffs even higher, possibly 35% or more. Japan would likely be on the letter list. Japanese reaction. Tokyo has acknowledged it must give and take in these talks, but hasn't promised anything yet. Any tariff shock on Japanese cars or electronics would hurt both consumers and manufacturers on both sides of the Pacific. India. India was in active talks with the U.S. to avoid a 26% tariff on its goods, up from 10%. Negotiations dragged on, and if no deal came through, India would face a major tariff hike. Prime Minister Modi's government has shown some frustration at U.S. pressure. Indian reaction. Foreign Minister S. Jaishankar has tried to keep talks polite, noting there will have to be give and take. On social media, many Indians have bristled at the idea of being groveling to America, One commentator quipped, "We will leave it, thank you, bye," referring to Trump's take it or leave it tone. Mexico and Canada, though under a new trade deal, USMCA, both neighbors have already faced strain with Trump's rhetoric. The U.S. even threatened to set tariffs on their auto exports if they didn't do more to stop migration. Mexico and Canada were once negotiating tariff exemptions, but relations have soured. If either is included among the 12, it could be to apply pressure on migration or energy policies. North American response: both governments will likely be defensive. Previously, Mexico sought special exemptions, and Canada may issue strong statements or retaliatory steps if hit. Other likely countries. Reports suggest Trump's team wanted to negotiate with dozens of nations, so others could be included, for example, South Korea, which already renegotiated its trade deal recently, Brazil, or Turkey. Smaller economies might be used as pressure points to show the threat to any nation that doesn't play ball. In sum, almost any country that exports significant goods to the U.S. and hasn't sealed a new deal might find a letter on their desk. That could include Asian, European, and perhaps Latin American and African countries. Each would be in for a shock, since the letters will specify the exact tariff rates, up to 70% in some cases. Global reactions, bullying or bargaining. The U.S. is the world's largest economy and the big boss at this moment, so most countries have little choice but to react. But the tone of Trump's threats has drawn sharp rebukes from other governments and analysts. In fact, some foreign officials have labeled the U.S. approach as downright bullying. China's foreign ministry spokesman recently fired back at American talk of trade talks, saying bluntly, "China and the U.S. are not having any consultation or negotiation on #tariffs. The U.S. should stop creating confusion." And Chinese Foreign Minister Wang Yi criticized certain countries, widely understood to mean the U.S., for using bullying, pressure, and coercive transactions, and provoking trade wars out of extreme egoism. In short, Beijing's message is, the U.S. is being unreasonable, and China won't be browbeaten. European leaders have taken a similar line. An EU spokeswoman reminded everyone that negotiations were ongoing, and no deal was reached yet. She called the idea of simply taking Trump's baseline tariff speculative, and stressed that the EU has always objected to unjustified and illegal US tariffs. European officials have even hinted they might maintain the status quo, keep current rates steady, to avoid provoking the full hike, rather than cave in to Washington's terms. In effect, Brussels is saying, we won't just surrender to a 10% duty without concessions. India's side, as mentioned, has tried to remain calm. Foreign Minister Jay Shankar said they're in the middle of tough talks and will push for an outcome that's good for India. But he made it clear India isn't rolling over. Many Indians see the U.S. tariffs as illogical. Why punish countries helping to provide cheap goods? And social media jokes about how other nations have been so kind to the U.S. by letting Americans enjoy low prices. In other words, the public backlash is to ask, why is the U.S. acting like a spoilt child, threatening friends and trading partners? Allies and rivals alike are mulling collective strategies. Some experts suggest that China and other affected countries might band together, not in a formal military alliance, but by coordinating trade policies or choosing not to retaliate directly to avoid escalation. For now, no formal bloc has formed, but economists worry that Trump's hardline approach could push American partners into each other's arms. As one think tank analysis warned, while both sides are dug in, much depends on who blinks first. And if the U.S. doesn't blink, it could be the one left scrambling. Economic impact. Who pays the price? So what happens if these new tariffs actually go into effect? Everybody loses, just differently. U.S. consumers will almost certainly face higher prices on imported goods. When taxes go up to 70% on items from India, for example, American buyers have to pay extra or go without. The burden of these tariffs often falls partly on U.S. importers and retailers, meaning higher costs for everyday products, from electronics to clothing. U.S. industries may see short-term help in a few narrow sectors, for example, some steel or auto factories, but studies show the net effect is bad for the U.S. economy. Economists at the Peterson Institute, a respected think tank, modeled Trump's 2025 tariffs and found they significantly reduce U.S. and global economic growth and increase inflation. In plain terms, growth slows, prices go up, and Americans end up poorer overall. Farmers and durable manufacturers would be hurt especially hard, because other countries would slap retaliatory tariffs on U.S. farm products and machinery. For example, if China or the EU impose their own duties in response, U.S. soybean or car exports could plummet, costing U.S. jobs. Container ships and goods at a U.S. port. Tariffs on imports would make many products more expensive, affecting consumers and businesses alike. On the exporter's side, other countries, a sudden 50 to 70% tariff is like an economic jolt. Imagine your best customer suddenly charging you double or more in taxes. Demand for your goods would evaporate. Industries such as European cars, Japanese electronics, Indian textiles, and so on could face enormous barriers. This could force them to find new markets, which isn't easy overnight, or to lower prices further, cutting their profits. The ripple effects are global. Supply chains would be disrupted. Companies relying on parts from abroad would scramble. Inflation could rise worldwide. And financial markets hate uncertainty. Already stocks and currencies have jumped around whenever tariff news breaks. In the noisy world of social media, Trump's tariffs have become a punchline and rallying cry. Pundits and commenters have been merciless. Some poke fun at Trump's take it or leave it style. One joked that after Christmas he should just send trade demands via TikTok instead of official letters. Others mock foreign leaders. For example, reports say Ursula von der Leyen, EU's chief, might wryly tell Trump, "It's not high enough, Donald. Punish us more," to highlight how outlandish the situation is. Many online are shouting that normal countries don't beg to export to the U.S. In fact, it's Americans who profit from cheap global goods. One commentator wryly noted, "Other countries have been very kind to Americans. They don't want them to pay more for the goods they consume. So kind." These sentiments tap into the idea that Trump's approach ignores the give and take of trade. Meanwhile, true believers on both sides of the aisle worry if Trump's belligerence will pay off. Supporters point out that Trump got so much done, quoting one enthusiast, by getting deals done by deadlines. Skeptics counter that breaking proven negotiation rules, being unpredictable, publicizing threats only scares off partners. In any case, the theater of satire helps underline the real stakes. As one quip asked, "Where are all the MAGA fanboys claiming countries are desperate to sign deals?" Indeed, the retort has been that no one is lining up to say yes to these new terms. Even China seems ready to say leave it, thank you, bye, rather than play ball, as one commenter put it. Use interests, bullying, or brilliance? Is this tariff blitz a wise long-term strategy for America? The answer depends on whom you ask. The Trump administration believes tough love or tough tariffs will coerce other countries into opening markets or accepting new rules, like boosting U.S. oil exports or protecting IP rights. A letter with a 70% rate is supposed to be a shock treatment to force progress at the bargaining table, but critics say it risks America's own interests. According to experts, the U.S. economy itself would suffer under the weight of retaliatory tariffs and higher import costs. One analysis notes the U.S. dollar might weaken as investors worry about an economic bunker-buster tariff regime, which in turn drives up inflation and dampens growth. In a more poetic sense, Carnegie Endowment analysts warn that China, and likely others, are dug in for a fight, believing the U.S. is overestimating its own leverage and its ability to handle the trade wars. If Trump never blinks, then China says we will hold firm. And countries in Asia and Europe might do the same, leading to a prolonged standoff. Moreover, alienating traditional U.S. allies, Europe, Japan, India, could have security or diplomatic costs. These nations might be less cooperative on issues like climate change, intelligence sharing, or emerging geopolitical challenges if they feel bullied on trade. In other words, winning a trade fight could lose you friends elsewhere. On the other hand, Trump's America First supporters argue that previous deals have favored other countries at the expense of American jobs. They welcome a display of toughness and see it as rebalancing power. However, even some economists in conservative circles warn that tariffs are ultimately a tax on U.S. workers and consumers. In the coming days, we'll see if these mysterious letters lead to any breakthroughs or just blowback. Monday's reveal will let each country see the exact demands, a tipping point. Will global leaders collectively call Trump's bluff, or will they scramble to sign quicker deals? What's clear is that the Trump administration is doubling down on a shock and awe trade policy. Whether this strategy bears fruit or backfires is uncertain, but the world's response has been one of confusion, criticism, and satire. Many see it as an example of bullying over bargaining, a style more likely to provoke resistance than cooperation. As one think tank bluntly puts it, the U.S. risks stagflation and market turmoil if it pushes its luck. The final irony is that this whole episode, a late-night press line on Air Force One, a take-it-or-leave-it ultimatum, comments on social media, plays out like a political reality show. But the consequences are very real. Jobs, prices, and international relationships hang in the balance. In the end, the world will be watching not just how high tariffs go, but how high Trump is willing to push before someone finally negotiates a take-it moment. Sources: official statements and analysis from Reuters, Politico, economic research groups, and government spokespeople. These show that foreign ministries and analysts have expressed strong objections to the U.S. tariff tactics, and that economists predict significant downsides to this aggressive approach. That's it for today. Thank you for watching.